principle hasn't changed. You need to prepay your corporation tax by the summer of the current year and before the year end in order to avoid a 10% penalty on your taxable income. The other things you need to worry about when you have your Cyprus company is the annual levy of the 350 euros, which was a levy introduced to the Cyprus companies a few years ago and which is about to be abolished in the coming years. Maybe in 2022, this measure will be abolished. Every year, all Cyprus companies, irrespective of whether they have been trading or not, they need to pay 350 euros to the Cyprus Register of Companies. It's a flat fee. If you don't pay it, it increases by 140 euros. And you need to pay it because if you fail to pay it year on year, the Cyprus Registrar of Companies can strike off your company, which means it can remove it from the list of registered companies, which will cause you banking issues. Your bank account will freeze your account. You won't be able to receive or take money out from your bank account until your company is re-established, and this can be done with the assistance of a law firm who will have to present you at court and say that this company has to be reinstated because we need to make it active. Something to touch base on about the corporation tax, which is something that we see very frequently, especially when we get clients from other audit firms or dissatisfied clients, are two things. One has to do with the corporation tax. For some reason, audit and assurance firms fail to inform either their local Cyprus clients or their international clients that the corporation tax of any company has to be prepaid during the year. If it's not prepaid, and I will explain how, it gets taxed at 10% of the taxable amount. To make a small example, if my tax at the year end is 10,000, I need to prepay at least 7,500 by August and by December of the current year. Year on year, these months may change, especially following the COVID pandemic, but the principle hasn't changed. You need to prepay your corporation tax by the summer of the current year and before the year end in order to avoid a 10% penalty on your taxable income. This measure has always been the case, hasn't changed for the last 10 or 12 years. It's a prepayment of corporation tax at the current year, and you do it in 2 installments, and those 2 installments need to cover at least 75% of your final corporation tax. So this is the number one thing we observe when we onboard, amongst other things, but I'm talking about taxation now. When we onboard new clients from other service providers or other auditors, is that they fail to make the prepayments of the corporation tax and all their previous years audited financial statements. When you look at the computation page, which is the last page of the financial statements, you see penalty tax 10%, and they end up paying thousands, especially if you take all the years, of penalties and fines unnecessarily. Another issue, when we get new clients who cannot know what their taxable income will be in the first year or in the second year, we do not prepay because cash is an issue, especially for startups. We do not prepay the corporation tax because we simply do not know how much the tax will be. We don't have the history. We haven't been their auditors. They haven't traded before, so we cannot know how much to expect. If, however, these clients have the money, have the cash flow permits them, they do proceed with prepayments based on their expectations and based on their management accounts by summer, July or August, based on management accounts of August and of December, to avoid this tax, this penalty on the tax. Another issue, you will never lose money if you prepay or if you pay more tax than you should. It doesn't mean anything if you pay more tax than you should. No, it doesn't mean that you're going to have an investigation because you have foreseen more income than what the auditors actually derived on. This is all myths, and they do not apply. If you have paid 5,000 more in a year or 2,000 more of corporation tax in a year, in the next year you will pay 2,000 less or 5,000 less, simply because in your tax statement there will be a credit. There will be a credit under your company, and the easiest way and fastest to claim it is by not paying the current year's tax. It's a bit more cumbersome asking money from the government, because that could entail an investigation to sit down with us, go through your tax returns, what you have allowed, what you did not allow, year on year. Let's remember that they can go up to 7 years back just to claim 5,000 or 2,000. So you will have to pay us, and possibly you will have to pay for any discrepancies that the taxman may have found on your prior tax return submitted. So the easiest thing to do is leave the credit in and don't pay the tax in the following year. And if the taxman asks you that you need to pay, you just, with a letter, tell them that I'm going to use that credit.